especially after FTX. I mean, any institution that was even thinking of dabbling is stepping back at this point.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway discussing his predictions for the price of Bitcoin and the current state of the US economy. Soloway believes that Bitcoin is on target to hit $18,000 soon, but is expecting significantly more downside, even dropping 50% to $9,000 due to equity market downturns and risk-off sentiment. Soloway knows that regulation will be a major game changer for Bitcoin and that big institutions may start accumulating Bitcoin as a way to get returns during a prolonged recession. He also notes that inflation, initially thought to be transitory, has become a bigger concern, leading to the Fed raising interest rates to nearly 5%. After the recent crash of Silicon Valley Bank, Gareth expects more fear and uncertainty to actually favor Bitcoin as people lose faith in fiat currency. Let's get right into the latest interview with Gareth Soloway as he gives his market prediction for the coming months and what we'll be seeing next. Don't forget to hit the like button and subscribe to the channel if you enjoy the content we do here. Let's get right into the video.
You've made some big calls on the Bitcoin chart, calling for 10,000. Do you still see that setup?
Yeah, I do see it. And speaking of trading 24/7, the crypto markets do enable you to do that. So I've really done my best, but I'm not going to lie to people. Occasionally I wake up at 3 a.m. and I'll pop up and just to see what the Bitcoin chart's doing. Luckily, crypto is very light volume in the overnight usually, but ultimately I still think that there's more downside and we'll go to 12 to 13,000 and eventually 9,000. And the kicker for this is not necessarily regulation. I actually think regulation, whenever it debuts, will be a positive thing for crypto. I think for me, it's more the equity markets and the risk off. So when we start seeing, and imagine we do go into a recession and the stock market drops 25% more. The question is, Bitcoin's trading at 22,200 right now. When we drop 25% on the S&P from the all-time highs, Bitcoin dropped from 69,000 to 15,000. So where's it going to go if we lose 25% in the stock market again? And that's where that lower target comes in, where I do think that we do probably see, 12, 13, maybe even 9. Especially after FTX. I mean, any institution that was even thinking of dabbling is stepping back at this point. They just can't do it. They can't do it to their shareholders. They can't do it to, if it's a hedge fund's fiduciary responsibility of being safe and so forth. So with regulation and specific rules on reporting and being open with the books, I think that does give the positive. And that's my bull case longer term, where eventually, yes, the equity markets collapse, pushing Bitcoin lower. But at some point, if we are in a drawn out recession, big institutions are going to say, well, we got to make our money somewhere. Well, now we can make a case for Bitcoin being the digital gold. We know the transparency is there. We can start inching into that and actually accumulating that as a way to get returns during a prolonged recession. So basically, you had a scenario where at first it was transitory, and we're talking inflation here. And then once it became apparent that it wasn't transitory, they reacted really quickly and they jacked these rates up basically almost to 5% at this point on the Fed funds. And so then the question is, are they now focusing on the negatives of inflation more than what could occur in the economy due to high interest rates over the longer term? And I think that's the thing that for me is keeping me up at night, is to think about, okay, well, if they keep interest rates here, at what point does the economy start to slip, and how bad of a slip does it happen, right? Because, they were talking transitory and then it was the opposite. So now they're talking soft landing or minor recession. Do we actually end up getting a big recession or a depression? So I think that in their mind, they're hoping that they just have to cause a minor recession or some sort of, happy medium in there. My biggest fear is that there are so many, it's kind of a house of cards that they've built, right? Everything is reliant on Fed stimulus, free money, government spending, all of these factors. And that once you start jacking up rates and you keep rates high for a certain amount of time, what types of things could break in the system? And again, going back to like 2007, going into the 08-09 Great Recession, we know that the derivatives market just started to collapse and it was really uncontrollable at that point. And that's kind of my biggest fear, is that it's the unintended consequences of what they're doing that ultimately could lead to a bigger collapse. And I am calling for a long-term recession. So I think that we're going to get in a scenario where the economy does slip into recession. It probably won't be Great Depression-like, but the Fed will be reluctant to lower interest rates quickly because of what happened to Paul Volcker in the 80s. And therefore, you're going to have an economy that doesn't know how to get back on its feet without low interest rates, without government spending, and without stimulus. And therefore, we're going to be stuck in this long, protracted kind of recession, probably 2 to 3 years it could be. I think the markets and the economy and even individuals, right? I mean, we've always been so used to, ever since '09, and even before that, you could argue that the Fed has always come to the rescue. But I think really since '09, when they started quantitative easing, where they actually were printing money and flooding the economy, you've seen the equity markets really responsive to that, all of these things going on. And that really creates a scenario where the market and investors are so reliant. It's almost like a drug addict and their drug dealer, where we become very reliant on that stimulus. And so once you take it away, right now there's still like that high, like, okay, maybe they'll come back in. Once the market realizes they're not coming to the rescue, I think that's where all out panic starts. And think about this, when people talk about a recovery, like, okay, let's say we slip into a recession, where does it come in where the economy does it naturally? How does the economy naturally get out of a recession? We don't know how to do that anymore. It's all reliant on, oh, well, whenever the Fed prints money, that's when we'll get out of the recession. That's a horrible place to be. I mean, we are reliant on this one entity to get us out of this recession. If you look at the metrics within the underground economy, so for instance, credit card debt is skyrocketing. I think it's even higher than it was pre-COVID. If you look at car loan defaults are starting to skyrocket as well. And so while the jobs market still seems to be holding its own, it to me is just on the precipice of a bigger collapse that we're going to start to see in the second half of this year. And I do think by the second half of 2023, we will say, you'll start hearing the metrics that we are in a recession. The key is the Fed's going to kind of say, oh, it's going to be a shallow recession, while I actually think it'll be a long, drawn-out recession. I mean, we had the emergence out of COVID where people had saved up money, they actually paid down debt, and then they went crazy and they started spending. And the spending, again, hasn't really stalled that much yet. So people get very addicted to living a certain way. It's hard to cut back spending when you get used to a certain lifestyle. So I think that's what's going on, and they're starting to run up that debt. They're starting to have to make the decisions. Okay, we have 3 cars. Do we pay the loans on all these cars, or maybe we just focus on one car if we can't pay the other ones? I mean, what are the bills that start to go by? These pay as you go type purchase things like Affirm and other companies where you can buy something and pay a monthly amount with an interest. Those are companies that are now starting to get some trouble because people are saying, you know what? What if I don't pay for this TV that I bought? Is it that big of a deal? I need to pay my cell phone. I need to pay my rent. But what are the bills that I can say, okay, I don't have to pay these? And I think that's the beginnings of what's coming, the beginning signals of a recession that is coming.
Soloway suggests that there's a general lack of understanding about how the economy could naturally recover from a recession, as investors have become so reliant on the Fed's interventions. He does see signs of trouble in the underground economy, such as skyrocketing credit card debt and car loan defaults. He predicts that these issues will lead to a recession in the second half of 2023, which he does believe will be long and drawn out. Soloway expresses concerns about the potential negative consequences of keeping interest rates high for an extended period, such as a major recession or even a depression. He also points out the reliance of the markets, economy, and individuals on the Federal Reserve's stimulus measures and the implementation of quantitative easing. What do you think of Gareth Soloway's recent market prediction for crypto, stocks, and the direction the Fed is going in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.